Good morning, everybody. I see
Good
people
morning.
filing in, and we're going to kick things off because we always say we want to start on time and we want to make sure that we end on time as well. And this is going to be one of our we approach these as we call them the Ask Me Anything kind of scenario. So it's designed to be a small group so that we can really make this customized as much as possible. So I'm really glad that everybody is here. So Michael, do you want to kind of kick us off and get us started with some of the compulsories?
Absolutely, Paul. Thank you. Well, good morning, everyone, and welcome to our SBSS workshop series. And our workshop title today is the financial management for contractors, and we have some exciting guests that we're excited to share with you
So,
today. But
thank you, Michael, and thank you to everybody for being here. And we really believe in relationship development being key to every small businesses and business, large and medium. It's really about relationships and connections based on, who can kind of team up, who can, to really expand your network. So throughout today, um, we want you to ask questions. We want you to really feel free to kind of put yourself out there. But as you do, also make sure that before you ask your question, just make sure you tell us a little bit about your business so that we can really get a sense of who you are. And Michael, can we go to the next slide? So a lot of you know this already, but if you don't, so the SBSS program was started just under 5 years ago by the great vision of the Bart Board of Directors as well as the executive staff at Bart to make sure that there are opportunities to work on specific pre-award and post-award services. The big takeaway here, as always, is there's never any cost to being a part of working with our program. So one of the other things, which is not on here, but we have special guests here with us today, who I'll introduce in just a minute. But one of the great things about working with a government agency is that our job is to introduce you to resources, to people. We are not promoting any organization or any business. We cannot do that. It would not be appropriate. But what our job is to really bring you some what we call the best and the brightest in the industry who really can make an impact on your business. So again, no recommendations on any businesses or nonprofits. It's just about making sure we introduce you to folks who can help you grow and build your business in a sustainable fashion. So, Michael, next slide. So we've got three folks here with us today, and I'm just so honored. And I want to quick go into Will Jackson, who basically is having to take a flight. So I know he actually was joining us in a very short manner. Is Will on the call yet?
he's joining right now.
Oh, okay. Well, I'll get back to him in just a minute. But then we have Laura Brecher, who has worked in the past with the SBSS program, and her title officially is Community Outreach Manager. But for as long as I've known Laura, which I think is over 15 years now, there's really no one who is more dedicated to seeing the success of small minority, women, veteran, and LGBT businesses. So Laura is just a remarkable resource and so committed to everyone's success. And then we've got TT, who is the Chief Programming Officer for an organization which I have worked with, I think, actually since the inception. And TT will talk a little bit about the work that she does. But Will, are you on? Are you
I am
on? And
Paul.
can you? Great. So can you just, I know you've got to run to catch your flight, but can you just go ahead and introduce yourself and
All right.
really talk about the role that you play with small business?
So yeah, my name is Will Jackson, and thank you all for having me this morning. My name is Will Jackson. I'm the Business Access Advisor at U.S. Bank here in Northern California, and my role is to focus on us, underserved, under-resourced communities. And the reason why is because when it comes to finances, the memo wasn't necessarily distributed evenly. So in my role, it's about really being intentional and deliberate about how can we get access. And it's not just the capital, but it's information and connections, not pushing the products or services. It's really about having conversations and figuring out what we actually need as business owners to get to that next level. And in my work, yes, consultation, yeah, there's products and services and things like that, but it's really about establishing trust. But then also allowing, the conversation to go back and forth. But then making sure that these business owners understand what the requirements are to actually get access to capital. because there's a lot of noise out there. There's a lot of noise. YouTube and TikTok, please stay off of that for your financial advice, because it steers you in the wrong direction when you're trying to get things going, when you're trying to get your business established and building that foundation. So the YouTube and TikTok, get a relationship with your banker, get a relationship with some individuals who are doing things, programs like this, Working Solutions, TT, Laura. There are programs out there that make sure that your businesses are in the right place. There is a lot of things out there that we can, but I think it's really about quieting the outside noise, having a conversation one-on-one to understand what it truly takes to actually get there. And I'll say this on this note, I'll end on this note. When we talk about credit, right? A lot of people want to say, oh, well, I have a 700 credit score. Well, your credit profile is more than just the number. It's more than just the number. There are things that go into your credit report. Have you been late in the last 12 months, right? Is it a consistent thing? Or is your DTI, is your debt to income ratio high? So it just is not, oh, I got a 750 credit score. But if you're leveraged to everything, then for us, when you sit down, I'm not saying there's nothing we can't do, but it's about really understanding that and having conversations with individuals like myself and other individuals out there, other organizations, banks. We're not the only bank, right? But there is so much information out there that our businesses shouldn't be in the same place they were a year ago. So I appreciate the time. Thank you all. This is going to be a great session. And I want to say this, you guys network with each other. Have conversations with each other, because you can't sell a secret, and you never know, the missing piece of your puzzle could be right next to you or on this call. Yeah. So you guys have $1 million day and enjoy this. And if you guys need my information, you can get it from them, and I'll be talking to you all soon.
Will, before you go, because I know we only have you for a minute, but one of the things that we found during the COVID crisis, when we started to go towards the SBA loans, many small businesses thought they had a relationship with their banker, but the relationship was with the teller. It wasn't with the actual banker. So do you have any words of wisdom? How do you kind of identify who's the right person within your bank, and how do you develop a meaningful relationship just on the top level?
No, Paul, I would say you start by going in and asking who's the small business specialist here, right? You start with the teller. It starts with the teller knowing who you are, right? The bank knowing you. When you walk in, they know your name, kind of like Norm and Cheers, right? They know who you are. And then it becomes easier for them to direct traffic on your behalf when a need arises. You may not need anything at the branch level. You may be looking for equipment finance. That person, that front-facing person, is the individual who can direct traffic for you internally. But even more than that, they also, your financial institution, regardless of who you choose to go with, should be able to connect you with tools, resources, and strategies, even if they can't do it. Even if they can't do it. Like, I have a great relationship, and I'm sure TT is going to speak on that with our CDFI partners, which are community development financial institutions. The ultimate goal is to add value. That's the ultimate goal to the client. It's not about, yeah, we want you to bank with US Bank. However, but if we're not a right fit for you, I don't have a problem saying, hey, go have a conversation over here. Go have a conversation over there. And from a credit perspective, if we can't, as an organization, give you something at the time, right? Because it's not a no final. It's just a not yet. We have our CDFI partners there who can stand in the gap on behalf, but we're still adding that value to the clients. We're still adding that value to the communities. But more importantly, the requirements on actually how, and I'm going to state that again. There are requirements that you need when you try to go to capital. It's just not, hey, you guys got these programs and we'll walk up, I qualified. Yeah, that's good. I'm glad you're here. But then at that point, our job is to provide you that roadmap so your business can be sustainable and successful.
Right. Well, Will, we're going to let you get on with your day, and we're grateful for your time and your expertise.
Thank you. I appreciate it. You guys have a good one.
Okay, great. So, Michael, the next slide, I think we're going to get right into Laura's background and comments. Laura, do you want to take it away from here?
Sure. Thank you so much for having me. And it's such a thrill to be back working with the SBSS small businesses and working with Paul and Michael, and being able to have TT and Will here today to share their extensive knowledge. It's an honor to be on this panel with them. So I'm with Balance. We are a one-to-one financial coaching nonprofit. We can work with you for free to talk about your personal financial goals and come up with an action plan with you. and really be there as your advocate, but also as your accountability coach as you seek access to capital, as you grow your business, or even if you have questions about personal credit and things of that nature. And just like the SBSS program, although the services are free to you, it is not a free program. Somebody pays for it, but it's not you. So you should absolutely take advantage, and there will be contact information about how to access balanced services towards the end of the presentation. And you can always reach out to Paul and Michael for more information. So we are going to be talking about finances for small business owners. There is a lot of information over the next following slides. So I am going to try to move through this quickly so that we can really have a nice conversation and bring TT and all of her amazing knowledge into this. But let's get started. So next slide, please. So quite a few of you have probably already set up your business, but I do want to talk about business legal structures and choosing the right legal structure for your business, because selecting a legal structure is a very important decision that affects both your personal liability and tax situation. And if you're not sure what to choose, you may want to consult with a lawyer before you make that choice. So a sole proprietorship, there's no separation between the business and the person, and the income and expenses are recorded on your personal income tax. So if you are the sole owner of the business and do not choose another option, you are considered a sole proprietor. So you will be paying on your personal income taxes for the business. If you do go into a partnership, that's a default option for businesses with multiple owners. It is like a sole proprietorship, only they're for businesses with more than one owner. So again, that's going to be reflected on your personal income tax. So another option is a corporation, and the most common type of corporation is a C corporation. And unlike with sole proprietorships and partnerships, corporations are legally separate from their owners. So you are not personally liable for the corporation's liabilities. However, C corporations are subject to double taxation. And that means that the company must pay taxes on profits, and the owner pays taxes on the profit distributions they receive from the business and must follow stringent regulations. Another option is S corporations. They're a more popular choice for small businesses than C corporations, and very similar to C corporations, but S corporations are not, for the most part, subject to the double taxation that the C corporations are. And lastly is an LLC. LLC is a limited liability company, and LLC owners are not liable for the company's liabilities. And an LLC is generally easier to form than a corporation. That's a lot of information, and I understand that it may be kind of difficult to wrap your head around it, which is why you'd want to, before you make these choices, definitely consult an attorney, or you can go to an organization like Working Solutions that offers technical assistance to help you make the right best choice for your business. Next slide, please. So this is really important. This is the sections of a business plan. And after I kind of go over the different sections, I'm going to have TT come in and talk about why business plans are so important from a lender's perspective. But basically, before opening up your business, before doing anything, it's a good idea to write a business plan. And this will help you think about all the aspects of your business, such as what your costs are going to be, what your competition is, how you're going to seek financing, all sorts of things. So the executive summary is really just a summary of your entire plan. It should be succinct and catchy. It's almost like your business's elevator pitch in a way, and it's what you're going to be presenting to lenders and possible investors in your business. In the business description section, you're really talking about what you are selling, the fields you are in, your mission statement, your business structure, and the company's history. So this is where you can really talk about who you are, what you are, kind of expand on your elevator pitch. The market analysis section is where you discuss who your business's target market is and your marketing plan. In the competitive analysis section, you should describe who your competition is and how you plan on dealing with them. The risk analysis, especially in our line of work, is really important because it discusses any other risks or obstacles that you may face. If you're, and you want to really think about development and production. So talking about what you're developing, how you're producing it, what the timelines are for that. Very important as well. The management analysis section describes who the leaders of the company are and their strengths, weaknesses, and qualifications. And this is an important section to write, even if it's just you, even if you're a sole proprietor, talking about yourself and your management style. In the operating plan, you should describe the nuts and bolts of how your business operates on a daily basis. The financial analysis and projections, again, another very important part of the business plan. This is the financial aspect of your business, such as your expected sources of funding, projected costs, and revenues. And as your business grows and changes, your business plan should too. So consider updating it once a year at least. But I really want to turn this over really quickly to TT if she has anything to add to that, or why the business plan is such an important function as you're getting your business off the ground and seeking funding.
Thank you so much, Laura. Absolutely. This and the breakdown that you shared here is I love the flow of what you presented. For first, in my role as a Chief Program Officer and also Acting Chief Lending Officer, when it comes time for decisions on a loan request, if it's a startup, a business that's a new business, or maybe expanding into a new line of business, the business plan is very critical. And it's that roadmap that helps us understand, to know, because we can't really get into your head what you know, helps us kind of tells us if you really have enough clarity about what how your business will function. Because the last thing a lender wants to do is to lend to somebody that's still learning on the job. Because there are costly mistakes that could set you back and also put the loan in jeopardy. And so, which is why also industry experience matters, or having somebody mentoring you to kind of understand what are the risks that are ahead and how can you address it. For example, the risk analysis in this kind of marketing condition, we want to know, okay, what's your contingency plan if something happens on maybe you only have one contract? How are you going to make up the difference? How's your team set up? What are the roles that your team would have? And is that realistic? Would you be able to deliver this level of quality of work with this number of team members that you have? And then the financial analysis, what are the cost structure look like? And sometimes when you look at the business plan, you might have to go back to the drawing board and say, this doesn't make sense right now, or I need to do it in a phased approach, or I need to bring a partner in, or I have to kind of collaborate with another business to really make this business work. And also to remember that there's two different mindsets. A business owner is always going to have a very positive, they believe in their business. And it's their baby. And a lender would have a mindset of, wait, but there are all these things that I see that could go wrong. And so it's your job to prove them wrong, to bring them to speed about what you're doing that makes you different from the risk that they see out there. And so being able to, and also sometimes it's also this cautionary questions that they bring up are meant to help you sharpen the business plan and your ability to know, okay, this might not be the right timing to execute on this. Maybe there's some other adjustments you need to make, especially if you're using somebody else's money. So this it's very critical to have this. And also, I will also recommend, don't pay somebody to do it. Just take a questionnaire and just try to answer in the raw format that you can answer it. Most lenders don't really care about like how polish the look. They want to know that you know and you understand this business and how it works. And if you feel like maybe you don't represent it good enough on paper, say, I would love to talk to you about this. Like, so they can get a feel of your passion and also feel of like your knowledge as well. And at the end of the day, the business plan is not what gets you the loan. It's just what gives confidence that you have the ability to do this business. What gets you the loan, we can talk about that in the different next, in other slides. So.
Thank you so much. Yes, great breakdown of that, TT. I really appreciate that. And yes, I'll be pulling you in a couple more slides too to talk about financing. So of course, it's really important to have business licenses and permits, and being here in the SBSS realm is great because you have Paul and Michael, who are experts on this, who can help you with things like understanding business licensing and permitting, especially when it comes to DGS certification. One thing that I really want you to take away from here is if you're doing business as a fictitious name, you want to register yourself. So if you're planning to do a business under a fictitious name, like let's say Main Street Flower Shop, you may have to register your name with the county and the state. A fictitious name certificate is actually required to open up a business checking account at a financial institution. Also, if you are going to have employees, you need an employer identification number for tax purposes. Paul, is there anything that you want to add on this slide about what SBSS services can do when it comes to business licenses and permits?
No, Laura, I think we can take that offline and we'll
Great.
talk with everybody on a one-to-one basis. Thank you.
Perfect. So business-related insurance, incredibly important, especially in the line of work that we're all in. So you want to make sure that you have your insurance ready and good to go. So you want to have a trusted representative who is going to help make sure that you have the right amount of insurance and the right insurance for the work that you do. This is especially important in the case of bonding. So my biggest piece of advice to you when it comes to insurance is always make sure that you have insurance just to manage your business on the day-to-day. But then if you're going to respond to an RFP at Bart, you want to read very carefully the sorts of insurance that are required by the businesses that are applying for the RFP, and make sure that you are ready to have all of that insurance. Now, you might not need to have it up front, and you only need to have it should you be awarded the proposal. And you can talk to Bart a little bit more about that because they always are very clear with the RFPs what type of insurance coverage there is going to be needed. We can talk a little bit more about this later on. So if you do have any questions about this, just put those questions into the chat. Next slide, please. Okay, so this is a big one, finding financing. And so really with finding financing, first of all, you want to determine how much you need. There are a number of types of ways that you can get financing. I'm sure that all of you here are very interested in learning more about this. And I would say that the biggest thing that you want to think of is where will the money come from to pay for your expenses, and how are you going to secure that money? So these are a number of ways that you can seek financing: personal assets, family and friends, venture capital firms and angel investors, commercial banks, credit unions and community banks, small business administration, credit cards, which we can talk about with Balance Services. We don't want you financing your business with credit cards if you can avoid it. But that can sometimes be a possibility. One thing that we left off here, and that I'd like to introduce Kiki back and TT back into the conversation with, is about CDFIs. So CDFIs, Community Development Financial Institutions, are a wonderful resource, especially when you're just starting out your business or you're not seeking that huge amount of financing that you would from a commercial bank in the hundreds of thousands of dollars, and you're really trying to start your business, get it off the ground and build it out. And so I'd love for TT to come in and talk a little bit more about working solutions and how CDFI financing works.
Thank you. Thank you so much. A CDFI is the acronym stands for Community Development Financial Institution. And the purpose of a CDFI, again, we are regulated by the U.S. Treasury, but there are so many CDFIs across the country, and the function is to really bring capital into low-income communities for low-income individuals to have access to capital. And by nature, to a CDFI to stay compliant, has to lend to at least 60% of the financing has to go towards low-income individuals. However, that being said, it doesn't mean that the money is just being given to anybody that's low income. We also don't want to overburden the business or the business owners, so they have to qualify. They have to be able to show that they can afford the repayment to be able to get that capital. And so in most cases in this small business CDFI space, we are more lenient around credit. So credit score is not it's not like a death sentence where you will not be able to get capital. We might be able to do it in tranches and keep it like, in increments. Like for us, we can do every 6 months. If your business is showing improvement, you can come back for more capital. But we've done loans for 500 550 credit score. And what we look for is a credit history. We really want to make sure that the individual has an understanding. Life happens. If life happens, we want to see the credit assessment, we want to have an understanding of what has occurred and how we can make an adjustment. What adjustment they've made. Are they on the payment plan now? Are those things been resolved? If they've not been resolved, is it at least controlled? And so we want to make sure that they have a plan to resolve it and they've already activated that plan. What we don't do, what we also look for is industry experience. If a business, in our case, Working Solutions is able to do startup loans. And so we want to make sure that the industry, I don't know if you guys can hear me, I have background noise around me. Is it okay? Okay, all right. And so industry experience is critical, at least a year plus in business. Same industry experience is, again, it's part of the risk mitigation. We know significant number of businesses go out of business within the first year and 3 years and 5 years, that incrementally. And so a way to kind of counter that is to make sure they have strong industry experience. And again, CDFIs are across the country, across the state, so it doesn't have to be Working Solutions alone. We're just one of the ones that represent here, but we work collaboratively. We refer out to each other. If a Working Solutions case, we go from $5,000 to $100,000, but there's some other CDFIs that can go up to $300,000, and they can work together. Sometimes we'll share deals together. So, okay, you take this loan and help them with the $50,000 in the next 6 months. Maybe we can transfer it over as they're growing and doing better. And so the goal is to really help the client win. And so if we see an opportunity where our partner can do better, we would refer them. Or if we think it's better to kind of step in first, we want to help the business stay sustainable. Your success is how we can show pride in our work. And so I think there's something to kind of keep in mind. And terms usually are fixed rates. In our case, most lenders are between like that 9 to 11% range. There might be some that have outliers in terms of interest rates, but we do fixed rates, and we go up to 5-year term loans. And we can do debt refinance. We've done a lot of credit debt refinance, but it has to be business debt refinance. So thank you.
Great, thank you so much for that. And there's, before we move on, there's just a couple things that I want to highlight on this slide. So with small business administration, those loans exist. However, the SBA itself does not loan money, but rather acts as a guarantor, paying your lender if you default on your loan. So typically to access a small SBA loan, you would be going through some other type of financing organization, a credit union, a community bank, a commercial bank. Because lenders have this guarantee, they are able to loan businesses they might otherwise deem too risky. So SBA loans are a great option. I also want to talk about the limits to liability protection. So if you are in an LLC, you may think that your personal assets should be safe since these types of legal structures provide liability protection. However, because small businesses often have few assets, most lenders will require you to personally guarantee the debt, meaning you can be held personally liable if the business stops making payments. So it's a great idea to avoid borrowing more than you reasonably expect to pay. And that's another thing, is that when you do make the ask, you want to make sure that you're asking for how much you need, not less than what you need. And maybe TT can talk a little bit about this, that it's really important that you do ask for how much money you need, because what happens if you don't ask for enough, TT?
Yeah. So underfunding could put you out of business pretty quickly, because now you have a debt and you can't complete the project. So always put a cushion on it. Ask for a little bit more, because especially in this market condition we're in, costs are rising at a faster pace. And so budget for like maybe a 20% increase and put that into the loan costs. And also have a conversation around it. Sometimes maybe you want to take a phased approach and making sure that those phases that you're able to deliver on it with the amount of funding that you have. So yeah, it's critical to ask for more, and we will evaluate if for any reason we think, okay, we don't see that you can afford the payment on this. Maybe finding another lender that can do a longer term up to 10 years for you might be the better solution to have.
Great, thank you so much. Next slide, please. So with bookkeeping, very important that you have good bookkeeping, and just keeping your business separate from your personal finances is not enough to tell what your expenses or revenues are. And so that's why bookkeeping is super important. And also the last bullet point on the slide is actually probably the most important bullet point, which is keeping personal and business expenses separate, which is why you do want to have a business account and go to a financial institution and open up a business checking and savings account, because it's going to be much harder to separate those expenses in the future. Rather, you want to do it right now before it becomes an issue. So it is tedious but necessary. Something to think about is using a double entry bookkeeping system. So like the name applies, under a double entry bookkeeping system, at least 2 entries are made for every transaction. So let's say that you bought $500 worth of supplies. If you use a single entry system, you would make just 1 entry, $500 for supplies. However, you're missing a crucial piece of information, which is how were the supplies paid for? So it could be cash, or perhaps the purchase was put on your account or a credit card, but 6 months later, you might not remember what you did. So with the double entry bookkeeping, you do not have this problem. So if, for example, you purchase the supplies with cash, you would record $500 for supplies, $500 for cash. So the left side would be the debit side, what I paid for the supplies, the right side, the credit side, how I paid for those supplies. Really, really important. So you want to record your revenues when goods or services are provided to customers, but you also want to record your expenses. Again, revenues, expenses all need to be in there. And this is why hiring an accountant is great. But even when you have an accountant, you want to make sure that you are keeping track of your expenses as well. So you can track them in a journal, you can track them on an Excel spreadsheet, but don't just rely on your accountant. You also need to look at your bookkeeping as well. And we can get into that That's why organizations like Balance are great. We can talk to you about how to do that. And organizations like Working Solutions can help you with finding a great bookkeeper or understanding the importance of bookkeeping and how to really be organized around it. So financial statements, another really important part of your business. So one of the reasons businesses record their transactions is to have the information needed to make informed financial decisions. However, you probably don't want to look through a long list of journal entries every time you need to make a decision. And this is where financial statements come in. They synthesize your business's financial records so that obtaining important information is easy. Having financial statements will also come in handy if you're seeking financing from investments or lenders. So the income statement measures all of your sources of revenue and expenses over a specific period of time, and it allows you to see how profitable or unprofitable your business is. The balance sheet is a snapshot of the business assets, liabilities, and owner's equity, investments in the company, and accumulated process at a specific point in time. And then the cash flow statement, it monitors the cash that's coming in, it monitors the cash that's coming out. And I'd like to again bring TT into the conversation to talk about why these financial statements are so important when you are seeking financing.
Yeah. So for most lenders, if you're kind of asking for 100,000 or less, the biggest two major ones that you'll be requested from you is the income statement and the balance sheet. In the income statement, we're looking for how is the business, first, how reliable is this? Are those financials? Who's preparing them? And so sometimes if it's not well prepared, meaning that the informations are not flowing properly, we're seeing inconsistency between that and like a bank statement or your tax returns. It might cause us to doubt the reliability of your business profitability, because we might doubt that, wait, this might not be accurate figures that we can rely on. So it's important to having a third party doing it for you, and also having it structured where you also understand what it is so you can answer those questions. And then the balance sheet, the value of the balance sheet is really looking at the assets and the liabilities. And we try to focus on the liabilities more to find out what are hidden debt that we are not aware of. And what are you paying for? What's your current payment on it? And what's your debt, your total debt that you have exposure to. That helps us to understand if our capital is really going to add value, or is it going to be more of a strain to your cash flow? Because there's only so much debt that a business can handle. And so also how those debt are structured, how long they are they more of like line of credit type of debt, or are they like term loans that have large payments, and how quickly are they due? So having an understanding of that is good. I'm seeing more, has been a consistent area that many smaller businesses have struggled with, either maybe having not so good of bookkeeper, and I'm finding tools nowadays that are using AI to pull data from your bank statement and from other platforms that you have to synthesize into like a P&L that makes sense and it's faster to review. So you're going to start seeing more of those kind of platforms show up, and they're more affordable, and just as affordable as a bookkeeper. But taking advantage of those kind of tools might be helpful for some small businesses. So.
Excellent. Thank you so much. Next slide, please. So it's tax time. Paying taxes, nobody enjoys paying taxes, but they can't be avoided. So one type of tax that you have to pay is FICA taxes, which are used to fund Social Security and Medicare. When you work for someone else, 7.65% of your gross income is deducted for FICA, and your employer pays another 7.65%. But when you are self-employed, you are responsible for paying the full amount since you are both the employer and the employee. The tax is calculated at 15.3%, of 92.35% of your gross income. And the reason it's not 100% is because your employer FICA payments are not considered taxable income. I am not myself a tax expert, so if you have more questions about that, give Balance a call, and also you could talk to your accountant about that. You also have to pay income taxes, federal income taxes. So unless you own a C corporation, the business's profits or losses are recorded on your personal tax return. If you expect to owe at least $1,000 in income taxes for the year, you are required to pay estimated taxes quarterly. And in order to avoid an underpayment penalty, your estimated quarterly employment and payments must be at least 90% of your actual tax liability for the current year, or 100% of your liability for last year. And if you have a new business, making the correct quarterly payments could be hard. So to avoid the underpayment penalty, be conservative in estimating your tax liability for the year. And when your business is more established, knowing the right amount to pay should be easier. So don't want to get too far into the taxes because that's a whole workshop in itself. But again, if you have further questions about paying taxes, you'll want to consult your accountant or the IRS, and you can also give Balance a call and we can give you referrals out to who might be able to answer some of your questions. And that brings us to the end of this the workshop part of our presentation. And now we're going to get into some case studies, and I'm going to let Paul take it away. But here's some information about how you can access Balance services. Been a pleasure.
Well, thanks. That was a great presentation. Thank you as well, TT. That was awesome. You know, what I'd like to do at this time is go over 3 case studies to give some scenarios that maybe some of the folks in the audience can relate to. And after I go through these case studies, I'm going to ask my colleague, Mr. Paul Pendergast, and Laura and TT to engage and give some clarity to these case studies. So case study number 1 is a glazing contractor. And from credit struggles to financial stability, the challenge on this one is the glazing contractor had a history of inconsistent cash flow due to slow paying general contractors, which hurt their credit score and made it difficult to secure materials on credit. Their bank also declined a line of credit due to a lack of financial records. Some of the stuff that we've been hearing during this workshop presentation. The solution on this case study is the contractor partnered with a local business-focused bank that specialized in small construction firms. The bank helped them set up better invoicing procedures and provided a $100,000 working capital line secured through SBA loan backing. Now, the outcome here, let me move some things on my screen here. The outcome is within a year, their credit score improved. They were able to take on larger glazing projects, and supplier credit terms were extended from net 15 to net 60, significantly improving their financial flexibility. So from here, you can see what the challenge was, the solution, and the outcome. Laura, TT, do you have anything to reflect upon what I just said?
Absolutely. This kind of scenarios are very common that we encounter in some relationships, client relationships that we have. We tend to see that the contract, I think just understanding the nature of contracting has a risk to it, and the risk is that you'll have a dependency that you sometimes have no control over because things could occur that shifts the timeline of payment, but you have to stay steady on your obligations. So if you have payroll, you can't miss those payroll deadlines, but your supply of contractor, general contractor might be able to push on those on their own obligation, but you wouldn't be able to kind of push back on many of yours. So that tends to not put a strain on personal income because people would then go and draw down on urgent credit utilizations through like what I call the predatory lenders that sometimes are online, and they will give you the quick relief, but it comes at a price. And so the key is, I think in this case, they were lucky enough to find a lender to create a short-term solution for them. And in those cases, one of the things that's important in setting up, the invoicing procedures, getting a first kind of creating some systems of where you have boundaries around how you work with some of your clients, your B2B clients. Meaning boundaries could be, okay, if you don't pay by this time, then we can't continue. We also have to pause on work because
Right.
else it becomes unsustainable for you, no matter how great they are if they're not paying well. That plus then adding a value add of finding a lender that's willing to hear your story and provide because a lender would not step in until they understand that you've created a mitigation plan around addressing your credit, supplier credit terms. And so having that clarity and being able to say, okay, this is the way we did it wrong the last time. This is what we've adjusted. We need a cash flow gap to keep us going because we have this existing a business coming in, contract that we're fulfilling. And also understanding what your margins are. I think the lender would need to understand how much are you earning per contract, how much are you, and if there is a slowdown, what is it costing you? But if you're on a good pathway, okay, if we can continue to finance this, there is a good enough margin there. When they're tight margins, it also gives them concerns to say, maybe we shouldn't proceed with this, like, intermediate kind of work. So, but in this case, they did it, they moved forward, and then the last point is what's the exit strategy? So a community bank will be able to step in, provide the mitigation in between, and then think about the long-term plan. What's the exit strategy? Do you need to have a company, an accounts receivable financing? Does that make sense to have an accounts receivable financing? Can you afford it in this place? So that's what I would say.
Michael, can I jump in? I know our time is short here. So Michael, could we just, I know we have 2 other case studies, but I'm thinking it'd be great for us to have some of our participants. I don't know if Josh or Monique have any kind of questions or input, but can we open it up to conversations for everybody?
Absolutely, Paul. I'm going to jump to the last slide here. Perfect.
Monique or Josh, do you have any questions that you wanted to ask that are representative of your companies? I don't want to put you on the spot.
I mean, for me, Paul, I think you're going to get to it though, insurance related. I think I was kind of, especially as a small business, sometimes we feel like we're kind of held by some of these limits that these contractors are requiring. And maybe if there's any type of recommendations on how we can navigate that, because obviously if they're holding us, let's say, to a 10 million limit, is there ways that we can maybe push back as a small business? How can we kind of navigate that? That seems to always kind of be questions
Yeah.
seem to have with contractors. So, and it's very expensive. So which aligns with financing and just financial stability. Because, those prices always go up. They never go down. So.
TT, do you have anything to say on that? Do you have any experience
Or it
working
can be
with?
going forward, just something if someone wants to bring it up later for future. I appreciate it.
Okay, you bet. Yeah, TT, did
Thanks.
you have any experience with that?
Can you repeat the specific questions?
Well, I think it was just more a comment of, especially in
Yeah.
construction, many times professional services or construction management, the client, the owner, the public agency requires these huge, insurance ceilings, which are incredibly expensive and so forth. So do you have any customers that come to you with those kind of issues, or is that something we can, sort out with an insurance expert?
Yeah, we tend to not have ours is on the financing side. And so if it's part of the cost of the work, then we just have to kind of factor it into their working capital. But we don't provide technical assistance on the business model, how to run those. We don't have depth of industry expertise in construction management. But we are seeing businesses that are asked that they have a high requirement for insurance. And so the question is that sustainable? Can you still make can you still have good margins with this insurance? That's a question. Everything has to go into the financial projection. And if it still makes sense, then yes, it will be part of the cost that could be financed. So we wouldn't discriminate about if we can finance or not. The question is, can they still have a good margin? Can they still show that they can make good repayment with this? The cost of insurance is rising. We're seeing that going for most of our clients. So sometimes we wouldn't fund a loan if the insurance is not there because it becomes a risk if there's something that happens in the business. So.
Thank you, TT. That's great.
Sure,
Anybody else have any questions or comments or want to bring anything up?
I
just-
can't comment. Okay.
Oh, was that you, Josh?
Yeah, I can say what we've learned here is we did move away from a larger bank of the small business and went to a smaller bank. And it was easier to get funding through a smaller bank. They seem to work better, aren't limited like some of the larger banks were. And then not just getting money through banks like that, but there are a lot of programs, I think, in San Francisco and Oakland that help fund buy PO jobs for small businesses. So if you secure that job and get a PO, and there's even some new ones out, we're meeting next week to talk with John Miller about there's a green initiative going on right now. It actually is lowering the interest rates for loans if the projects you're working on are related or going for some of the green building certifications. So there's a lot of that out to help because that's our biggest problem in the small business is still that cash flow.
Great. And thank you, Laura. Did you have anything to add on to what Josh just said?
Well, I was going to say, like what TT said for the last question, yeah, when you have things like insurance expenses, that's something when you're going out and seeking access to capital, you want to build into your financial projections and what you're asking for. So that's kind of what we're talking about when we say don't ask for too little. Actually ask for a little bit more than what you might need so that you can have that cushion. But I also want to say that there are so many different organizations out there that can give you access to pro bono attorneys or accountants or insurance professionals who would be able to work with you and answer some questions. And if you give Balance a call or if you reach out to some local CDFIs, they can actually give you referrals to those resources that can help you with things like this for free. And yeah, there's so many different CDFIs offering different kind of lending platforms based on your business. So do the research. And like TT said, a lot of these CDFIs work in harmony together and they want to uplift small businesses. So they are happy to refer you out to a CDFI that might be a better fit for your particular needs.
Awesome. Thanks, Laura. That's really great. That's great information. So thank you. Anybody else in our group? Anybody want to add anything? Any questions for Laura or TT? Oh, okay. Well, we will get this PowerPoint out to everybody, but Michael, do you want to kind of take us out and give people 5 minutes back to their day?
Absolutely, Paul. Thank you, by the way, for everyone joining today. This will be provided to the attendees in a PDF format, and we will also share the link to the video once it's done. And if you'd like, there's 5 key takeaways you can take a screenshot of, but we'll send this in the PDF as well. But these key takeaways are part of today's presentation and are totally relevant. So make the best of your Friday. Enjoy your weekend. Here's our contact information. If you have any questions, please reach out to the SBSS program. Paul or myself are ready and willing to help you. And we look forward to seeing you again at our future workshops. Thank you, everyone.
Thanks, everybody. Appreciate it.